Hello, everybody. Welcome to this installment of Social Security Talk. I'm your host, Marc, the guy in red. It's a beautiful day in Cincinnati, Ohio. This is the Friday before the Super Bowl. The Chiefs and the Eagles are playing. And, I should be rooting for the Chiefs, but I'm going to root for the Eagles this time around. But I'm really excited to have Lisa Rehburg on this episode of Social Security Talk. Every time we teach a class, on demand, a webinar, or live in-person class, I always talk about life insurance settlements. And Lisa, I always tell advisors that my discussion on life insurance settlements is only for the cutting edge and proactive advisors. If they are not one of them, then the advisor can take a little nap while I talk about life insurance settlements. It's a very, very much of a misunderstood opportunity, very much of a misunderstood strategy. I listen to the radio and TV all day long, Lisa, and I see commercials from Coventry Direct. I'm sure you do too, talking about life insurance settlements. I know the one guy says, I never knew I can sell my life insurance policy. And I do remember the commercials from Life House Life. I've seen those commercials lately, but I'm sure they're still out there. Lisa is with Rehburg Life Insurance Settlements. She's been in the industry, life insurance settlement industry, for about 7 years. But before that, Lisa, you told me that you were involved in the insurance industry. Am I correct?
Yes, I've been working with insurance agents and financial advisors for over 30 years. So I'm 28 in my head, Mark, but, my license number blows it for me.
Well, you know something? I'm 66 right now. In 72 hours, what's 24 times 3? 72, I'm going to guess.
It.
I'll be 67 on Monday, so I can't wait for that to happen.
Awesome. Happy birthday.
Thank you. I hope I'm still around at 67.
You will.
Anyway, Lisa, I'm always fascinated by the life insurance settlement industry. And that's because advisors have, I'm not going to say they don't have any clue that it exists, but they're not proactive enough to start talking to their clients about life insurance policies. So let's talk about maybe the backstory about life insurance settlements. How long have they been around, and what types of advisors should be on the lookout for these opportunities?
So, Mark, thank you for that. I like to say that there's a lot of misperceptions about what life insurance settlements, or life settlements for short, what they are and how they work, right? So to answer your first question, life settlements have been legal since 1911. That totally blows people's minds. There was a Supreme Court decision called Grigsby versus Russell, and I love the backstory on Grigsby versus Russell because I'm an insurance geek, but probably not appropriate here. Anybody wants to know about it, I'd be happy to tell them about it. But Justice Oliver Wendell Holmes, in his statement of decision, deemed a life insurance policy an asset that we own. You own yours, I own mine. We all own our policies, no matter what type of policy, including term. And because it's an asset that we own, we can sell it. Now, fast forward to nothing happens until the mid-'80s, and I think this is where people get confused. In the 80s, we had what's called viaticals. So a lot of advisors have this notion that they remember viaticals, but that was in the beginning, right? And so what's happening is AIDS patients at the time, remember, if I had AIDS in the mid-'80s, my life expectancy was very short, right? 2 to 3 years possibly. So AIDS patients were selling their policies and, getting cash and using it for experimental treatments, around the world cruises or whatever. So the market started there, but I live in the West, as you know, Mark. I love the West, but I don't love the Wild West. And back then, Wild West, no regulation. So I think some advisors have this misperception that that's what the market is today. Could not be further from the truth. We are a very highly regulated market by departments of insurance across the country. And here's the important part too. Not only my side as a broker, but the buyer's side as well. And I think that's really important for people to know. Many consumer protections are now in place.
I believe, Lisa, everybody needs to sign off on a life insurance settlement. The owner of the policy, the the beneficiaries of the policy.
Absolutely.
And there's one more party, right? You got the owner, you got the beneficiaries, you got the people
And the
paying the
insured.
premium who may not be the owner, the
Right.
insured. Fair enough. Yeah, everybody signs off. So there's no so there's no misunderstanding of what's going on.
Absolutely none, and that's part of
Okay.
the regulations and the audit process, and that's really important, Mark. We don't want anybody to not know what's going on.
So what is a life insurance settlement then, and why should somebody enter into one? What types of clients? What are the questions advisors should ask clients? So let's kind of get into that a little bit.
Yeah, so a life insurance settlement, I like to parallel it like selling a car. Like if you sell your car, you're getting a lump sum of cash, right? A car is an asset you own. You get a lump sum of cash, you sign the pink slip over to the new owner, and they drive away with the car. It's very similar. Clients will receive that lump sum of cash. They're going to sign over the pink slip, the change of ownership, to the buyer. The buyer's going to pay the premiums and become the beneficiary. So that process is called life settlement. Now, the answer to your question about who should be looking at these and the advisors, if the advisors are doing annual reviews, and they probably are, they talk about assets all the time. Asking about a life insurance policy is important. Is this life insurance policy still doing its job? And your answer to your question of who should be looking at this, anybody who, typically these are seniors, but doesn't have to be, but typically seniors, if they are looking to lapse their policy, if they're looking to surrender their policy, if the policy does not fit in their budget anymore, they should look at a life settlement before they lapse or surrender it, because on average, a life settlement will generate 3 to 5 times cash surrender value. And if I have a moment, I'll just give you an example. We're working with an advisor right now. Client has a $1 million life insurance policy, and his cash value is $66,000. Well, we are getting him $200,000 in a life settlement. Last time I checked, being the finance major that I am, 200 beats 66.
You got it. I think advisors, they're not asking these types of questions and not exploring the life insurance and the life insurance settlement opportunities with the clients are basically missing the boat. I mean, you can sell up. I've always heard, Lisa, correct the figure if you can, but 85% of universal life policies do not end up in a death claim being paid. Is that right? 85%?
It's about right. Yeah, I've heard 88, 89, but it's right around there.
Fair enough.
Yeah, and term policies.
Let's just say it's huge.
It's huge. And term policies are well into the high 90s. And I get it. That's why life insurance companies are in business. So totally understand. But I think besides benefiting a client, right, and doing fulfilling fiduciary duty to clients, advisors do have secondary bonuses, if you will, in that, number one, if they're life insurance licensed, we can pay commissions, depends upon the advisor from a broker-dealer perspective, but we can. It's there. The other thing is there's now assets under management. So a client now has $200,000. They may need to have that money reinvested, or perhaps the client needs another product like an annuity. So there are benefits to advisors. Once again, number one, fiduciary duty to clients, but they're always business advantages to advisors as well. This can be another revenue stream for their practice.
You made a comment earlier, Lisa, that most people, if they don't need their insurance policy anymore, they can't afford the premium, they will basically they feel like they have two options. Number one, they can just let it lapse, which means they kind of get zero for it, or they surrender it for cash surrender value, which is a decent amount. However, though, or can be a decent amount, I don't know. However, though, through a life insurance settlement, you indicated it was a 3 to 5 or 4 to 6 times cash surrender value by entering into a life insurance settlement, right?
Yeah, that's exactly correct. And obviously that's average, so it depends upon the client situation.
Sure.
But yes, and so that's why I'm saying, then back to what you were just saying, these stats have shown that 500,000 seniors a year will lapse their life insurance policies. That's a huge number. And even more important, several million a year, according to the life insurance handbook, is will surrender their policies. So we're talking about a lot of seniors every year who are lapsing or surrendering their policies, and they can benefit from a life settlement. Now, what I'm not saying, Mark, is all 2.5 million can sell their policies, right? That's not true. But to give you some perspective, about 3,000 sold their policies last year. So we've got 2.5 million a year going to get rid of their policies in one way or the other, and we've got 3,000 that sold. So what I am saying is many more.
Huge.
Yes,
Wow.
huge gap.
Why divide?
Why divide?
And that's because, I guess, a couple of things going on. The policy owners don't know they have options. And more importantly, the advisor's not asking the right questions. And they need to be. Definitely need to be.
I agree. The Insurance Studies Institute did a study. This is about 6 or 7 years ago now, but that's where the 500,000 statistic came in. But here's the other part of that study that's really fascinating. 90% of these same seniors who in the survey said had they known about a life settlement, they would have at least considered it. And that is what this is about, just giving them options so they and their advisors can make the right decision for them and their family.
What types of insurance policies are appropriate for settlement?
Any type of policy can be sold. Now, once again, what I'm not saying is every policy we see can be sold, but what I am saying is there's no type of policy that can't, right? So group policies, term policies surprise people. Our number one seller is Universal Life. I think that probably makes a lot of sense to people, but a very, very close. Yes, there you go. A very, very close.
I'll be calling you sometime. So life, universal life, whole life, permanent life, and convertible term, right?
Yep.
Convertible.
Term policies are our number two seller, like a really close number two behind universal life.
Okay.
Yeah. Typically, you're right.
You hear that in the Coventry Direct commercials that even if you have a term policy, you can still consider a life insurance settlement for that.
Correct.
So
97, 98% of the time they need to be convertible, but not always. 2 to 3% of the time, even non-convertible terms we can sell.
Okay, got it. Why should somebody reach out to your organization versus go directly to Coventry?
That's a good question. So Coventry's good. Please don't. I'm not here to.
That's okay.
They are good. They do a good job.
Lisa, let me say it's free advertising for the industry. You can't beat that.
I agree. Here's the reason why. Coventry's a buyer direct. When you call a buyer direct, they are trying to obtain the asset, the policy, for as little as possible. And I don't blame them, right? If we're trying to buy a car, we're trying to get as little as possible. But where we come into the picture as brokers is we have access to many different buyers. Our fiduciary duty, and I intentionally use that word, our fiduciary duty is to the client to market their policy, to obtain the highest amount of money for it that we possibly can. In other words, we inject competition into the market, and we
do.
Right, and so we maximize value for clients. That's where we fit.
About 4 years ago, or maybe 5, a representative from Coventry Direct called me. He didn't know who I was because he thought I was in the financial industry, whatever. He wanted me to go directly to him with opportunities for a life insurance settlement. And I said, well, it seems to me that going to a broker would give me a higher value for my clients' life insurance policies. He said, no, that's not necessarily true. I know it is, but that's what he said.
I know the value of the work we do. Full disclosure, we're paid commissions for our work. Yeah. But when you have a client getting $200,000 on that policy I was telling you about, the opening offer on that policy was $75,000, and that $200,000 was after commissions. So, the clients have no problem paying our commissions because they know the value of the work we provide for them.
not only do you get a commission, Lisa, but there's an opportunity for a commission share along the way.
Absolutely. So we've got commission share for advisors if they're life licensed, right? That's the key. Plus, like I said, additional assets under management and additional product sales for advisors as well.
So tell me, Lisa, what policies would not be appropriate for life insurance settlement?
Well, the policy type, once again, as we talked, Mark, doesn't necessarily matter, but it's more a situation of the client's particular situation. This is typically for the senior market. The buyers, thinking at it from their perspective, are looking for clients with 10 to 15 years, sometimes 20, of life expectancy or less, right? So typically seniors, we do have clients in their 50s, but they have more significant health issues to fit in that life expectancy window. And this is also for policies about $100,000 or more. So those final expense policies that are $15,000 or $20,000, this is just not a good solution for those clients because, frankly, there's just not enough money there for them.
And there are no restrictions, Lisa, on what you can use those proceeds for. Am I correct?
Absolutely true. Anytime you sell an asset, right? Car, a stock, a house, you can do anything with the money you want. Same thing here.
Right. So I'm kind of thinking a good place for those funds might be to buy long-term care insurance. Right. It might be to put into at the equity market, maybe buy some bonds. So you buy a nice annuity where you have some nice guaranteed income down the road. So basically, you can basically I look at it as being a way to reallocate those assets. If you've got $200,000 cash opportunity or $500,000 opportunity, you can take that $500,000 and put it someplace else.
That's exactly right. Because
how about the tech? Go ahead.
I'm sorry. Because you're back to your point. This is an asset that the clients don't know they have, but more importantly, they're going to get rid of it, right? We are like the last stop on the bus stop there, on the bus route. We're the last stop, i.e. the client and their advisor have determined this policy is unwanted, unneeded, unaffordable, whatever. They're going to get rid of it. We're here to get them more money than just lapsing or surrendering. So back to your point, they are repurposing this asset, which they can do.
They are. How about taxation of proceeds? How does that work?
I'm going to caveat this by saying I'm not a tax advisor, right? Or a CPA.
No problem.
And clients,
but Taxman is there someplace.
That's right. And they should consult their own tax people. But here's the answer to your question. The premiums the client has put into the policy from the start of the policy are a basis. So if the settlement amount, the sale amount is underneath that basis, and many times it is, there should not be any tax on it. Over that basis, typically long-term capital gains. So up to the basis, no tax. Over that long-term capital gains, there can be some select situations with universal life policies of cash values above the basis. That little corridor could be ordinary income, but that's typical life insurance taxation anyway. And then long-term capital gains over.
Got it. Okay. So, Lisa, how can advisors connect with you? How does this process go? Let me ask you that.
We're very much like a real estate transaction for a lot of different reasons. From a timing perspective, especially, we are 3 to 5 months to properly do the job. We have to get medical records. That's how the buyers will evaluate life expectancy, and that can take a while. So from the time we get an application in, which is how it starts, no application fee, to the time we hear from investors is probably a good 60 to 90 days. And if clients would like to move forward with an offer, then it's probably another good 4 to 6 weeks. So 3 to 5 months start to finish. We're a longer term solution, not a short term solution.
So you probably suggest after an advisor meets with clients and they start talking about the life insurance policies and they identify the policies or policy that might fit a life insurance opportunity, that the advisor just will contact you, right? Give you a call, send you an email, and you can talk to the advisor, get some more facts, some more specifics and details, and give us some advice as to if this is an appropriate opportunity or not.
Absolutely. Do it every day. We have clients call or email and say, hey, my client's situation looks like this. What do you think? And
Lisa, how do folks reach out to you? Can you provide your social media space, phone number, and email address, and Aaron will type it in as we finalize our podcast for distribution.
I am on LinkedIn, and my last name is Rehburg, for those of you that are listening and don't see the video. Our company is RehburgLifeSettlements.com. That's our company website, so Rehburg, lifesettlements.com. I am an old dinosaur in that my email is lrehburg@AOL. It's just easier, so lrehburg@AOL.com. And our phone number is 714 area code 349-7981. Repeating one last time, 714-349-7981. And obviously I'm on LinkedIn.
You say a dinosaur. That's because you use AOL?
Yes, because I've had it forever. And I thought Lisa at Rehburg Life Settlements is just way too long and confusing. So I just kept Rehburg at AOL. It's just easier.
I didn't know AOL still existed.
Surprise. Yeah, I've had it for over 30 years, and everybody's got it. So why change something that works?
Mm-hmm. So what I would suggest to all the advisors and other folks too, you don't have to be an advisor to have a need to consider life insurance settlement, is to look at your or your client's life insurance policies, talk to your clients about those policies, find out if those policies are needed anymore, if your clients can afford those premiums, if there's another place to park that asset besides in the life insurance policy, and then give Lisa a call to talk to her about the opportunity to enter into life insurance policy for either your specific client, or if you're an individual out there with life insurance policy, you want to talk to Lisa to see if your policy is one that she could work with. Definitely. Lisa, I really appreciate you being on the podcast today. I'm going to continue to talk about life insurance settlements. I think it's just too much of an opportunity that just it just goes by the wayside because advisors don't take the time to talk to their clients about it. You find that all the time, I'm certain.
I do. And like I said before, at the start of this session, that there's a lot of misperceptions about it. So I'm hoping, Mark, thank you for the opportunity to be here. So I'm hoping through, this podcast that it can reach people to understand that this is a real deal, and it can be a very good benefit to clients.
I agree 1,000%. Why let your policy lapse? Why surrender it for cash surrender value? Life insurance settlement is definitely out there. Like you said, 85 to 90% of policies do not end up in a death claim being paid. That is just amazing, and I can't comprehend such a high percentage. Thank you, Lisa. Any final comments you'd like to make?
Just the fact that, once again, I'm so grateful to be here, Mark. Thank you so much for this opportunity. And we're here to be of service, and it is a privilege to be of service to advisors and their clients.
Thank you, Lisa. I appreciate you being here, and I definitely will get you back on another Social Security Talk podcast, along with being on one of our hour-long webinars for the 5,000 advisors that we've educated across the country since 2013. So anyway, this is Marc Kiner saying over and out, and we will be back with you when we record our next Social Security Talk podcast. Bye, everybody. Bye, Lisa. Thank you again.
Bye. Thank you.